Hello, this is the Mike and Mario show. Today, yeah, we usually do it on Friday, but we're doing it on Thursday because of scheduling conflicts. Mike is away as well on holiday, but there's no holiday on YouTube, so you keep going. Uh, the big thing today that we gonna cover, of course, is the Federal Reserve, but also what's happening in the markets. We're seeing a big reversal of what happened yesterday. Yesterday, the Dow went up 1,000. Right now, we're down 1,200. We're seeing yields spike a lot higher. The 10-year yield right now is almost at 310.
Yeah.
Yesterday, it dropped. So, hi, Mike. How are you doing?
Mario, doing well, my friend. As always, there's more stuff that we can never cover in one session, but looking forward to connecting and yeah, trying to just keep people plugged in, man. So let's do the best we can. So as always, for those plugged in, definitely share your thoughts, ideas in the comment, and we'll jump on them as we get to it. So yeah. So what do you want to start, my friend?
Yeah, I mean the Fed yesterday, most of the market had priced in already a half a
Yeah.
percent rate hike. They
Yeah.
did that, but what led the market to rally and actually bond yields to drop yesterday was that uh, someone asked Powell about the 75 basis points hike maybe, and he said, oh, that's not being considered right now, and apparently that
Yeah.
was the reason why the markets went bid up. But it seems like people are confused, or maybe the Fed is losing credibility on the inflation
Right.
front. Maybe people are realizing that a Fed funds rate just around 1% with CPI growing officially at 8.5 is still inflationary, and that
Yeah.
you need to get rates maybe to 10% if you really want to stop the inflation. There's
Yeah.
a lot of talk that the inflation, sorry, the economy is really strong, but then we saw a few days ago that the trade deficit is the probably the highest ever on record. That means that Americans are spending a lot but are not producing as much. And why they're
Yeah.
spending? Well, because credit is still really loose. And I don't think it means the economy is healthy.
Right. I agree. And so as we're talking, let me make sure my microphone's good. I saw someone said my voice was muffled. So speaking on what, so just to piggyback on what you're talking about, at this current moment, as I mentioned before we went live, is that only in the G7 nations are the actual inflation rates being reported in single digits still, whereas in everywhere around us they're already well into double digits and increasing. And so, like you just mentioned, if they raise rates above 10%, like that's according to their figures. But in order to actually fight inflation the way they say they want to, it has to be closer to 20, and we know that's not going to happen. So they're literally stalling and trying to bring, as they mentioned, bring it down for a soft landing, which I don't. It's going to be
Yeah,
soft
that's the
for
well.
prolonged.
Sorry, yeah, they last year they said it was going to be transitory. Then they said that it was
Oh, I'm not sure
peaking.
you're talking. I can't hear you on my side. Give me 1 second, Mario. Give me 1 second here. Let me figure this. My speaker. Let me make sure I got it on my side. Hello. Can you hear
Yeah,
me?
yeah.
Okay,
Can
I
you
hear
hear
you
me?
now. Okay, go ahead. Sorry. Did you hear
Yeah,
me? Did you hear me?
yeah. You were talking about the word now is soft landing,
Yeah.
economics, which is wishful thinking. I saw that Yellen used that, Jamie Dimon used that, Jay Powell. It's like the
Yeah.
transitory last year. I think it's going to be more like a crash landing, unfortunately.
Right. Yeah, and that's the thing. Like, and just for those, before we went on live on air, I was talking about how we're very focused on what we're being told, and we're buying. I think we're buying into the narrative that it's that they can actually get this under control. When in actuality, it's we all know that it's all too late. It's more so, what can we do to continue to stay ahead of what they're you know calling themselves trying to do, and that's where it's getting like at this point, what else can we do, Mario? That's where I feel like there's more that we can do
Yeah.
to try to help warn
Well,
people as best we can.
Well, yeah, what else can you do? Well, I think knowing what's going on and knowing that the powers that be are not being straight with us is a big step to protecting yourself,
Right.
because you will be aware that things are not as good as they tell you. So your decisions will be based on that, and it won't be based on the idea that everything is great and that you should keep you should buy that new car and put it on finance, or
Right.
uh, sell your smaller house and buy a bigger one and get a mortgage. All those
Right.
kinds of things, or start a business maybe at the wrong time. And
Mhm.
the I guess the other thing as well is on the non-financial side, as you talk about, uh, stay prayed up and be in a close-knit community and help other people,
Mhm.
because yeah, it's nice to help other people. And the other thing as well, sometimes you get back more than you help.
Right.
So that's more the non-financial side as I see it. And try to ignore as much the mainstream media, because they
Yeah.
they report all the narratives that they want us to believe in.
Right.
So I mean, I know what's going on because it's impossible unless you go into a cave and just
Right.
stay there. But
Right. And
I try to avoid it as much as possible, and here, know what's
right.
going on, but ignore it, kind of.
Right. Right. I understand that. And so, as you're thinking, like the first thing that came to mind is it's never been more practical to be unconventional in everything you do, from the way you handle your financial situations, the social side of things, and family wise, spiritual wise, you name it. So just because we're living in completely uncommon times, but it is what it is. So let's jump into some headlines, man. The bond yields. Let's jump on that. I'll put it on the screen real quick so people can see. This is in real time,
Yeah.
according to what's out there now. And so, share your thoughts, man. What are you
Yeah.
seeing out there, Mario?
Well, you see, the Fed announced yesterday that they're gonna, from the 1st of June, as we were talking earlier, they're gonna start unwinding their balance sheet, quantitative tightening. So that
Yeah.
means uh, either allowing the bonds and the treasuries and the mortgage-backed securities in their balance sheet to uh, mature, because a lot of times they come due, they get paid.
Yeah.
And instead of taking that cash, the Fed, and buying more bonds, they're going to just extinguish that cash. Or they're also going to be selling uh, treasuries and mortgage-backed securities into the market, and they're going to be
Yeah.
doing that 45 billion a month, and then 90 billion from October, I think, or September.
Right. Yeah.
And the market knows that. So what are they going to do? They're going to front run the Fed, uh,
Mhm.
eh, because the Fed's going to be selling. So they're going to try to sell first. And when you sell bonds, there's a lot of potential sellers in the market. The price goes down and yields go up. It's just the opposite of QE. When the Fed promises to keep buying, the
Right.
market will front run the Fed and buy it.
Mhm.
So the reason this is bad is because we live in the credit economy, basically,
Right.
in the US, the UK, Western
Right.
Europe. And this just means that the cost of credit is going up when the cost of living is rising, when inflation's high. That's going
Mhm.
to make things even worse.
Right.
That's what a lot of the conventional economists don't understand. They think this is going to drive inflation lower,
Mhm.
but no, it's going to drive it even higher, and it's going to drive mortgage yields higher, and people are going to have less disposable income.
Mhm.
It's going to destroy small businesses because they
Mhm.
can't finance. That will mean less supply, higher
Mhm.
prices. It's a vicious circle.
Right. And all that leads to, and ultimately, them removing all the accommodative stimulus that's put out there, and it's going to drive things up, and it's going to lead to an inevitable crash. Like, so it's like already baked into the cake. They have to see that. So, my thought would be like, why are they deliberately trying to bring it down like so fast, especially heading into the midterm type
Well,
of thing, or it's
maybe they
hard.
think, maybe they're so deluded that they think they can manage, a soft landing, as we were speaking earlier. So,
Yeah. Yeah.
or
It's
maybe they'll
possible.
have a big excuse to stop it, some exogenous event. out somewhere in Taiwan or something like that, or another pandemic. Maybe you could talk about that, because you're telling me about this WHO thing and WEF as well.
Yeah. So there's more than enough distractions out there now. Of course, the primary focal point here in the U.S. happens to be the Roe versus Wade situation. And in my personal opinion, it's not necessarily about the individual; it's more so the global agenda. So a lot of people have their own personal feelings, but I think we're past the point of people being concerned with their own interpretation of what's right and wrong, and look at the bigger picture of what is wrong altogether with it. And the reason I think this leak came about, as I mentioned the other day in one of my rants, is that right now, also within the EU area, the UN, World Economic Forum, and the WHO, they're meeting right now. They're planning on trying to basically bring all world governments together for this pandemic treaty. And to me, that is something that we should all be concerned with, for humanity's sake, rather than our own personal or individual thoughts and ideas on this Roe versus Wade situation here in the U.S. So there's a much greater agenda going on other than what we're being told, and people need to, really dial into that stuff right now, in my opinion.
And this UN, WHO, and World Economic Forum, they're unelected officials, and they're supposedly going to get this treaty through that regulates us in our own countries. So it's like world government. So that's pretty serious, and it's completely under the radar, because I had heard of it a few weeks or a few months ago, but I'd forgotten about it, and you reminded me. So there you go. And Roe versus Wade is a very heated debate. I think in the end of the day, people need to respect the decision of the Supreme Court, and that's it.
Right. And that's where, I just want, people tuned in definitely know where we stand on everything, and there's more distractions going to be thrown our way than ever before. So don't get sucked into that, because what this does, it touches on people's emotions. People really get emotionally invested in this stuff, to where it just adds more fuel to the flames of frustration that our countries are experiencing. So,
because Roe versus Wade, all it, how can I say, if you repeal that, all it will do is give the power to decide on abortion to the states.
Right.
And I'm sure there will be states who will say, yes, you can do it, and some that won't. So it's not really going to change much, because people can just go if they want. And I'm not judging people here. I'm just saying what people will do. People will just go to the state that you can have an abortion, and so on. So it's not, like you said, it's just a distraction. It's not going to change things that much.
Right. Yeah. Don't let these people play with our emotions continuously, because they're trying to press every button they can. So, but let's get back to some of the primary monetary issues at hand. So you're in the UK. Share with us a little bit of what's happening on the ground there, because your governments and your central banks are locked in step with ours. So
the Bank of England raised rates today from 0.75 to 1%. And actually, the British pound today is down 3%, which is pretty big. They're talking about a recession now, which is not surprising for you and I, because we've been speaking since September, when the energy prices started rising. Everything was rising. It was way before the Ukraine war. And here in the UK, you had a cap on energy prices, utility prices, that were capped until April. So it wasn't hard to see that things would get worse after April. And lo and behold, people are surprised now that we're in recession. But the other thing I would say is that the recovery from the lockdowns was engineered mostly through fiscal policy, government borrowing and spending, not through organic private sector growth. And that's now phasing out. So it's not a surprise. And also with inflation, people have a lot less disposable income. So there's no surprise that we're going to go into a recession. And in terms of shortages and prices, things are still okay here, but energy, fuel prices are quite high, but food prices aren't too bad, but they are creeping up.
One thing that is alarming to me that I'm just starting to realize is that when we always are leery of what we're told because it's told with the idea that there's a greater agenda behind it. And when mainstream news pundits come out telling us that they are expecting a recession, I like to read even deeper into that because we know what a recession is based upon the great
Yeah.
financial crisis, and the alternative economists talk about something a lot worse. And of course, something a lot worse would lead us to a depression style experience at the same time that the World Economic Forum
Yeah.
is telling us that we should expect a great reset. So it's like I'm more towards the line of a depressionary style
Yeah.
event of unknown proportions rather than just something mild that we'll recover from.
I
And here
agree
they're
with
going to try to
you.
sell it.
And I've looked several times on my channel in videos and talked about GDP, how they calculate it. And
Mhm.
GDP has been positive. The only reason is because government spending's gone through the roof, and they add government spending to GDP.
Mhm.
So yes, there will be a recession, but it will be under the official definition of growth. But I don't think we've been. I think we've been in a recession for over 2 years, if
Right.
not since '08, because ever since '08, we've been running huge budget deficits, not
Mhm.
just here in the UK, but in the US. Even under President Trump, the last year he was in office, the budget deficit was 5% of GDP.
Yeah.
So I would say we've been in a depression since 2008. It's just been,
Right.
uh, they've put lipstick on a pig, so to speak, ever since then. And what's the lipstick? Well, it's all the QE, all the fiscal spending, all the
Yeah.
monetary inflation.
Right. Now, just once again, more indicators that tell us that things are never as good as they want to paint it is just look at what's happening all around the world. So I'll go to this other headline here to show you what the rest of the world has already been feeling well before now. And so Turkey's an example for to use, but look at their numbers though. Those are real numbers as far as what they might be experiencing, but I think they're probably a lot higher. We're here, they're still telling us single digit, and we all know it's a lot higher than that. So we can name countless other countries that are already experiencing double
Yeah.
digit inflation numbers, and we have a measly 8.5 supposedly here.
Well, and they measured that through CPI, but you have also the producer price index,
Right, right.
which is like the step from production, from, let's say, natural resources, and then it goes into production, and then that's and then they sell it to the wholesalers, and that's
Right.
the producer price. I think in the EU went up over 30% for the Eurozone. In Norway,
Mhm.
it was up 70.9% a year. So I think it's only a matter of time until we get double digits under the official numbers in the West
Right,
as well.
right. And he froze down for a second, my end. So on top of that, let's. I want to piggyback on other than what's headline stories. I want to touch on that Brazilian story real quick, just to
Yeah.
show that beyond what we're being told, other countries are making moves, and it doesn't include utilizing the dollar and our payment networks anymore. But here's a headline: Brazil Lula proposes creating a Latin American currency to be free to quote free us from the U.S. dollar dependency. So
Yeah.
this is definitely going to get a lot of momentum, and they happen to be one of the Brics nations. So I think before the end of this year, we're going to get some type of news flash from the Brics
Yeah.
nations on what they want to do with the next world currency.
Yeah, that would be dependent, of course, if he wins the election. I
Right,
think it's in October,
right.
but I think it was last year, the Brazilian central bank increased its gold reserves by
Hmm.
60%. So
Right.
even if Bolsonaro retains his post and wins the election,
Hmm.
I think even him is probably considering working
Hmm.
closer to like Russia. He visited Putin just before the war started in
Right.
Moscow. The president of Argentina visited Putin. So I don't think it's just Lula that's looking at this.
Right.
I would say, though, it would probably be a different kind of setup if Bolsonaro stays in power. But
Yeah.
I'm not too sure I'd be too keen on a Latin American currency, even
Right.
if it's detached from the dollar, because Latin America has had a history of inflation.
Right.
So,
That's true.
but you're right in that more and more people want to de-dollarize and be less dependent on the dollar, and
Right.
that's gonna drive this move away from dollar reserves that countries need to keep. And usually
Right.
they keep these reserves in bonds and treasuries. So they're going to be probably selling these as well. It's not going to help rates.
Right.
The less demand for dollars, the higher interest rates will go.
Right. And then speaking of which, of more getting out of dollar liabilities or U.S. liabilities, there was a article talked about earlier this week about a major a Japanese hedge fund that decided to dump a large portion of their reserves or treasuries or whatever out in the market. And so we know that there's some bigger agendas going on. And I think regardless of whether or not this Latin American story actually takes ground or not, we know, as you mentioned, about them accumulating large amounts of gold. There's definitely gold in the equation somewhere in the near future. So that's the
Yeah.
biggest thing I think we take away from this.
Yeah, because up until now, since 1944 in Bretton Woods, the dollar has been considered the hard currency. Up until 71, it was as good as gold.
Right.
So if you're going to move away from the dollar, there's no other currency out there, fiat currency, that has any credibility.
Right.
So they're going to have to rely on having gold as a backing to any currency that moves away from the dollar. And this doesn't mean to say that I think the dollar is still as good as gold. Of course not. But it
Right.
means that gold needs to be part of it.
Right. And as we're speaking, so I saw somebody talk about the Dow, and so I thought I'd bring it up real quick so we can get some real time action. So as of now, the Dow is down 1,000 points, and
Yeah.
yeah, it's just the beginning.
3.19%. Let's see, the S&P, though, is down 3.65%, and the Nasdaq 100 is down almost 5%. So actually, the other indices are dropping even more on a
Right.
relative basis. And the other thing I would say, the banks as well, they're not doing really well. I think J.P. Morgan's gone down 29% since
Yeah.
the high from last year. So I think that's probably got to do with that story you sent me about these debt moratoriums, because up
Yeah.
until now the banks have been able to classify these really crappy loan, excuse my French,
Yeah.
as good loans. But when these moratoriums or deferments expire, someone's going to be paying for this, and the banks, I think, are going to be in trouble.
Right. Big time. And so that's one of the, so either, because it says all this talk now about the student loan situation, and people are begging to have their student loans forgiven. And it's like, okay, what good would that do? I mean, it puts you in a ease some of the pain now, but then again, it's good to say that you probably also have other
Yeah.
aspects of your life
Well,
that
it's funny
as well.
because let's say someone might have borrowed and has a student loan, but maybe his uncle, a rich uncle, bought the bonds. So if it's all like a flip side. Someone's liability is someone's asset. So if
Yeah.
you forgive all the student loans, you're going to hurt a lot of investors. I'm not saying that student loans are a good thing, but it's all there is no free lunch, you see.
Yeah, so I just see, let me see, somebody talking about the Dixie right now is close to approaching 104. Let me put this on the screen here, and that's where like
Fix, yeah.
it's let me see here. Okay, once again, we're looking at the measurement. We're
The
we're
dollar
looking at the
index.
measuring stick of a failing basket of currencies.
Yeah, I mean,
And
this
it's
is
like,
right near the top from 2017. So yeah, and there's a top just below there in 2020. So we're
Yeah.
like in the triple top territory. But uh, I mean, people need to look at the bigger picture that it's all these are all fiat currencies. And if you go
Right.
back to 1973 when this index was compiled, um, they started at 100.
Yeah.
So in about 50 years, it's up 3.89%. At the time, gold was at $80, and now
Uh-huh.
it's almost at 1900. So, um, yeah, it looks good, the dollar, but show them. I'm going to show you if I can share the
Okay.
dollar in rubles. The dollar's
Yeah.
kind of collapsing.
Yeah.
Um,
The ruble's doing
we
hella
we
good.
touched 60 today, the
Yeah.
dollar ruble exchange rate. Let me bring it up here. So it's all relative.
Right.
Um, let me see.
And one of the things, regardless of the appearance of strength in the Dixie index,
Yeah.
the actual currency in of itself will not buy you more goods and services at this current moment. The only way the current dollar structure we have will buy more is if everything around us crashes down to
Mm,
where there's a mass liquidation of everything and goes on sale. Then you can
yeah.
take those dollars and buy something with them and get more
And
bang for your buck.
eventually, there you go. Can you see it?
Yeah, let me put it on the screen. Go ahead. Let me put it
There's
up there. There
is
you go.
that yeah? Oh, there's the ruble. You see, the war broke out and the dollar went to 140, and now the dollar dropped to
Mhm.
60 today.
Yeah.
And it's at 64. This is like the lowest level for the dollar even before the pandemic started, you see.
Yeah.
So
So,
what this says to me is that the ruble and the Russian economy are a commodity based economy, and
mhm,
it's showing me that commodities are going to continue to do well. And
right.
yeah,
Right. So while we at it, Mario, let's get to some questions, or just because where everything's a little different on my side, I'm in a computer lab lobby on a laptop. So let's get to some questions, thoughts, ideas. What else we not touching on
yeah,
that we need to touch on, share our 2 cents on. So feel free in the audience, throw out some thoughts, ideas, suggestions. We'll jump on them and get ready to wind down and get ready for another interesting week ahead of us of extreme volatility. We're going to see the gyrations in the markets they're going to get stronger and stronger heading into the summer, man.
Belly Dance Arabia says no need to watch any horror movies. Just look around us. That's a good one.
Oh man.
Faith Parent, love your neighbor. That's a good one.
Yeah,
Yeah.
buddy. Love your
And
neighbor by helping them stay educated. That's the best way we
yeah,
can love right now. Acts of
Andres
kindness, educate them.
Andres Chambotti, what advice would you give to Argentinians, Latin Americans? Um, Forget about the U.S. dollar. Uh,
Hmm.
uh,
Yeah,
even
good
if
point.
I grew up in Brazil, and I think people there still consider the dollar as good as gold.
Right,
But advice to Argentinians, I think they're quite well prepared. They've had this kind of event every 5 years for the last
right,
50 years. So, but one thing I would say to them, don't trust the banks. I think they don't. And maybe try to get some gold and silver if you can over there.
right. Definitely. So let me just for the sake, let me check on what's the USD AR. So as of right now, the official number that we're being given is the Argentine peso, 116 pesos to the dollar. And of
I
course,
see.
black market is double that. So we'll just say
Yeah.
250 to a dollar on the streets down in Argentina. So they have experience, as you mentioned, on dealing with events like
Yeah.
this. And
The thing is,
real estate is big for
yeah.
them down there, which might be a concern as well. So
Yeah, I mean, hard assets and real estate is always good to have. But yeah, don't be fooled by the current dollar strength, I would say, if you're an Argentinian.
right,
And if
and
you've
that's the
got,
thing. Oh man, they have large stashes, like because as you mentioned, that's their preferred
mm,
method of savings for fiat currencies.
mm,
And the question is, if they start spending those things, putting them out there, they're going to come back to the U.S. eventually.
yeah,
So think about it. This is a current moment because of all this volatility.
mm,
The world recognizes even more of the mainstream pundits are now talking about, needing to diversify out of,
Yeah. I
this
think
hyper financialized
Russians,
asset.
the Russians, I think that's where they held the most dollar, $100 bills. And I think
Mhm.
that's all flowing back because it's no use to them anymore.
Yeah.
So that's why the ruble is so strong. And
Yeah, buddy.
Argentina is a wealthy, rich country in resources.
Mhm. Yeah, very true. So the nations that are, the wealthiest underground are the ones that are looking to move away from the dollar the fastest. 'Cause
Because
they're tired of being robbed. The world is tired of being robbed.
yeah, and
We export dollars.
America can just print the dollars, borrow it into existence, and buy, cattle from Argentina
Yeah,
and something real or oil from Russia, and you get a piece of paper. And that piece of paper is going to go down the drain. Yeah, the dollar index is strong, but it's against other pieces of paper.
yeah,
What will really reflect the devaluation of dollar is the higher gold and silver price
right,
eventually.
right. What else? All right. So any other thoughts out there? Anything we did not touch on? Of course, we talk about metals, but we all know that that's the place you want to be to protect and preserve yourself right now. And
Uh,
what
Dr.
else? Any other thoughts out there?
Sorry, or
No,
you
any
asked?
other questions out there?
I'm just saying, Dr. Mata saying disposable shaving razors in short supply. Um, yeah, I mean, those kind of things that you need every day, I think it's
Mhm.
a good idea to stack up on them because the
Right.
prices are going to keep rising. That's what Arpad from Star Path Academy.
Yeah.
I've had him on my channel a few times. He went through very high inflation in Romania in the 90s, and he said
Mhm.
it's just simple things like toothpaste and soap. Just when you go shopping, buy a bit more than you usually do. So
Right.
yeah, I think that's a good strategy.
Yeah. Yeah. And I see somebody here mention shortages. So we're definitely going to see more shortages of goods not being imported in, as well as the people who are awake and aware grabbing a little bit more
Yeah.
will speed up the idea of shortages. So get more of what you need now, knowing it's going to be expensive later or unavailable later. So that's, yeah,
Bar light broker Mario, get a gold chain before it's too late. I don't really wear jewelry, so but I
man.
got my wedding ring that it's white gold actually. So
Right. So Jay, great assessment there. It says silver has not done a good job of protecting wealth yet, just been cheaper
yeah,
to buy. But
yeah,
be patient, man. Like
yeah.
I saw you mention about on Twitter about silver being kryptonite to the banking
For the
cabal,
bank, oh, it is.
and they know once they lose
Yeah.
control of that, game over, because it's needed on many fronts
Wow.
outside of monetary
The
easing.
Hunt brothers almost brought the bankers down, and it wasn't only him. He was buying silver with like some of the Arabs from the Middle East who had a
Mhm.
lot of oil money. And
Right.
yeah, they put a stop to that. The Fed had to raise rates to stop the dollar from dropping, and then they stopped people on Comex. Uh, you can only liquidate; you couldn't buy anymore.
Mhm.
So they changed the rules of the game, and that's why I tell people don't use the bankers market, which is
Mhm.
Comex. Buy the physical. Keep
Right.
stacking. Get your
Right.
weight up.
Yeah. The true price setting mechanism is whatever it costs you when you go down to your local coin shop. That's
Yeah.
how you gauge the real price of, or the real fiat price of money,
Mm.
i.e., silver and gold. So, yeah, man, just be patient, man. There will be a day of reckoning soon. But also think about the most important thing you probably gonna need is food and water and shelter. So,
Mm.
uh, make sure you got that secured as best as you can for whatever that's worth. But all right, Mario, we're about that 34-minute mark, man. We've covered a lot of subjects as always, and this is a on the fly setup. I apologize for the technical side of things on my side. As I mentioned, the computer lab,
Well,
but
I think you've done well to
yeah, it was
get.
informative, man. More people got put on information, but to these guys was something. Heading to the weekend, especially, enjoy your outdoor activities. Definitely hug your loved ones, man. Pray for your family and friends, and just I'm diving into more on my side, talking about the true issue we have which to me supersedes the idea of our money problems. It's the governance crisis we're having, because with this pandemic treaty and all this stuff happening, they're reshaping the structure of our governments, and they're trying to bring them all together. And this goes back to the biblical side of that one world government, which we were
Oh
told
yeah,
about, which
yeah,
concerns me heavily, because what good is having all your financials matters in order if your
yeah,
government still controls and
yeah.
runs your life? So
I mean, yeah, it is worrying. I mean, Rafi Farber, he says that they've never really succeeded in having a one world government. But who knows? I guess Rome was close to being. They ruled the whole of Europe, most of Europe and the Mediterranean. But
yeah,
you haven't really had one government ruling the whole world, and that's very difficult because you're centralized, and centralization never works well. You look at the Soviet Union,
right,
that didn't lasted what, 70 years, and then it
right,
collapsed. So that's the only
right,
hope we've got. Or maybe if we do get hyperinflation and their currency, the dollar collapses, they won't have a way to finance their one world government. That's
right,
our only hope. But it will
right.
be painful if that happens.
Right. It's going to be painful regardless, because either they're going to deliberately bring it down for their soft landing, i.e., crash, or we are on our own. Because it's a matter of removing the remaining little bit of trust that the people who are asleep have in the system. A lot of people think that things are going back to normal, whatever that is, and it's
Yeah.
a matter of getting to those people so that they can realize that what they're
Mm.
doing at the top levels will make it so that the whatever new normal we're going to is not going to be any better than what we had before. So it's basically removing that last bit of trust in a respectful manner, to where it's not rebellious in nature. And I don't think we need to hit the streets directly. We need to vote, or vote with our
Uh,
pockets, i.e.,
yeah,
not spending in big corporations and
yeah. I
withholding
think
some things if need be.
Yeah, I don't think the protests, and I'm not saying it's not good to protest sometimes, but it's not the way forward.
Right,
It's just trying to do things differently.
right, right. So here's that little, sort of who is trying to take over, a vote coming May 22nd to 26th. So people, dive into that information, go on the internet, find out everything you can, share that so people can realize outside of Roe vs. Wade, what the real agenda is. It happens to be happening within that May 22nd to 26th time frame. So people can realize that, that they're being deceived. And
Hmm.
then last thing, Chris, appreciate you, man. It says if Putin wanted to stick it to the West, why doesn't he just go ahead and peg the ruble to gold? What are the pluses and minuses of doing so? Uh, so I don't think he wants to do that, because it's going to put restraints on him as well. Like, the idea of going back to a peg will definitely cramp down on his ability to do whatever he's doing within his country. And I think they want to bring in that digital representation. So I think it'll be some type of digital ruble peg, so that is something that they can use in
Yeah.
the interoperability fashion with the Chinese yuan, digital yuan, and the Brics nation. So I don't see them going back to pegging it directly the way that it was done in prior years.
Yeah.
So for whatever it's worth.
I think they pegged it a few weeks ago,
Mm-hmm,
5,000 rubles per gram,
mm-hmm,
to stabilize the ruble, and it did that. The ruble
yeah,
dropped from over 100, or the dollar dropped from over 100 to 80,
mm-hmm,
and that put a floor on the ruble. And
yeah,
then they withdrew that peg. It did its job. But I heard that they're considering actually uh, backing the ruble with gold. So
yeah,
it's not. It takes time, and I think they might need more other countries on board,
mm-hmm,
so you can do it together, because it would be much more effective. And they're
right,
also talking about backing the ruble with a basket of commodities.
mm-hmm,
And as for the digital ruble, I think earlier this year, some parliamentarian, from someone from the Duma, a politician, talked about that they could have a crypto ruble that would be
mm-hmm,
backed by gold. So that is possible.
yeah,
So you'd have to
yeah,
trust, I guess, the Russian treasury that they have the gold, or
right,
maybe they could make it. Maybe they could mint ruble coins, gold coins,
right,
and make if you have a one digital ruble,
yeah,
gold ruble, you could go to a bank, a Russian bank, and get the gold. I mean, that would be really good, but
Right.
I wouldn't hold my breath.
Right. That would be the best way. If they really want to reinstate trust back into the monetary system in that country, that would be the best way to do it, is to make sure the people can get gold directly from their treasury or whatever it's called.
Any bank in
Yeah.
Russia, that is linked to the central bank and the treasury.
Yeah.
You go with your digital wallet and say, "Oh, I have 5 rubles in gold. Can I have
Yeah.
my ruble gold coin?"
That'll definitely help get things in the right direction. But one of the concerns with pegging the ruble to gold, I can imagine as you mentioned, they'll need other nations to jump on board with that. Because if not, I imagine a lot of
Yeah,
nations looking
and
to actually
and
get rid of rubles and get the gold. They'll get the
and
gold
they'll
instead.
have to sit down at a conference and work out each country's money supply and their gold holdings, and work out like a rate that will be just right, kind of not deflationary. So
Right.
it's not just like they did at Bretton Woods. They had to sit down and work out the rates.
Right. Right. Because that gold window, they will close the gold window very fast unless they come to some agreements. Because it's gonna be gold flight. The
Yeah.
gold gonna be leaving quick as I don't know what.
All right.
All right, man. What's he gonna say? Last thoughts. Let's get ready to wind down. My computer's starting to overheat a little bit. But leave us with some thoughts heading into the weekend, Mario, if you don't mind.
Well, not much more to add. Like you said, go out and enjoy nature, whatever you like doing. Uh, yeah, don't let the powers that be get you down and scare you. Just live as normally as you can. Everything's
Right.
still fine. You look at Argentina and Brazil; those countries, they've had loads of these crises, and they're still there living.
Yeah.
So it will be probably a shock in the West, because we've been led to believe that we are exceptional and that those kinds of things don't happen here. But I
Right.
think they will.
Right. I do agree, man. Well, all right, people. Be blessed, be safe. Back at it again next week. There'll always be something to talk about, but beyond what we talk about, let's not be reactive, be proactive. Do the best you can what you have. Help your family and friends. Get plugged into this information so that they're not on the bad end of this equation when there is a unfortunate correction. So if a good portion of your financial dependency is still in this system as they're bringing it down for any type of landing, you're going to be on the losing side. So we all know where places to be, and of course, getting your weight up and sustaining yourself as best you can outside the system, man. So definitely get your faith up. Get your faith up big time. So all right, man. Well, Mario, it's always good to connect with you.
Yep.
Be blessed, be safe, everybody, and we will see you guys later. Peace.